There are a lot of things New York doesn't have, but with big money makers like New York City, Niagara Falls, and other attractions, you wouldn't expect a shortage in millionaires to be one of them. But a new report from the Empire Center shows New York is adding new millionaires at a much slower rate compared to almost every other state in the country. A.J. McMahon is the president of the Empire Center for Public Policy, and he joins me now to talk more about this report. E.J., good to see you.
Hi.
So New York we are creating more millionaires. More people are making,
right,
seven figures a year and more, but we're not doing it as fast as really near a majority, if not
all other states.
All other states. What's going on here?
Well, there was kind of a natural experiment in 2012. What happened was the federal government made it clear, it was clear if you followed relations between Obama and Congress and federal law, that effective in 2013 at the start of the year, there would be a very big increase in federal tax rates as applied to the highest income taxpayers and to capital gains. So that was a signal. This is like a natural experiment. If you've got pent up capital assets, if you've got pent up wealth, cash it in 2012 because it'll be taxed more highly in 2013. So it basically said clear out your drawers. If you can afford to go claim your stock options now and roll over any kind of financial asset that you've had gaining, appreciating in value, cash it in because the tax rates are going up. So what happened? Well, because of that, there was an exceptionally large increase in 2012 throughout the country in the number of $1 million and above earners filing income tax returns. And this is the new IRS data. It's the latest data because it's a year and a half lag. But here's the interesting pattern. The national average in an increase in the number of $1 million earners was 29%. In New York, it was exactly half of that. It was 14.6%. New York was the slowest rate. Now, this wasn't true of all states that had a lot of $1 million earners to begin with, which would influence percentages. For instance, California was slightly above average. Florida was above average. Texas was well above average. So what's going on here? I think it's something we need to be concerned about because remember, New York State is disproportionately dependent. In fact, we're more dependent than ever on really high income earners, especially $1 million and above earners, to basically carry the state budget on their backs.
That's our PIT, the personal income tax.
Our personal income tax is our biggest revenue source, and 43% of it is paid by the highest earning 1%, which basically right now more or less starts at $1 million. By the way, if you go down to the category of merely really high income as opposed to millionaires, if you go down to 200,000 and above, which is really actually still in middle class downstate and is very well off upstate. We also were slower in the rate at which we're creating new households with $200,000 incomes and above. In fact, since the recession bottomed out in 2009, those first 3 years, we were below the national average and ranked pretty low among states in that category. Again, our tax code is basically relies very, very heavily on high income people. Well, what happened is our high income people, especially the $1 million and above earners, are disproportionately concentrated in the financial sector. And the financial sector, in fact, while people in it are very well off, very wealthy, is not expanding in terms of its employment. And its profitability was not way beyond expectation. So what happened was in California, where you have the tech boom is producing more wealth. Oil and gas in states like North Dakota and Texas producing more wealth. Even sort of run-of-the-mill, corporate executive stock options are producing more wealth because of the growth in the stock market than people in finance were producing. Now, we got to be concerned about that, again, because of our dependence on these very high-income taxpayers.
Right, and obviously they're the ones who are funding the operations of state government. And I mean, just looking at the map here, you've got, and this is in black and white, so unfortunately we can't put it up on the full screen here, but you've got North Dakota, you've got Montana, who are producing probably the biggest number of millionaires. Also Louisiana.
In percentage terms.
Percentage terms. Also you've got Nebraska and Iowa on there as well. What's going on
Oil,
there?
gas, agriculture. Okay, these 2012 has pretty much continued since then. Good year for oil. If you're in oil or gas or agriculture, you're doing very well. And in percentage terms, their number of rich people, to put it simply, income millionaires, is growing faster than the three states at the very bottom of the pile, which are New York, New Jersey, and Connecticut, which share a tax base almost, but which the IRS reports separately, are right at the bottom in terms of how the increase. So We have a large number of $1 million earners in these states. In fact, I have a chart in my report that is the 10 states that accounted for 2/3 of $1 million earners, okay? And it includes us in Jersey and Connecticut, it includes California, Texas, Florida, Illinois, some others. And again, so that's the kind of, let's look at the places that already had a lot so we can see what their percentage growth was. And again, we're at the bottom of that list. So, it's interesting, there's also an irony to this. Our politics is schizophrenic on this point. What do you hear about, especially in the Democratic primary now for governor?
You hear a lot about income inequality.
It's all about income inequality. We're bemoaning the income inequality. Mayor de Blasio was elected complaining about income inequality. Well, income inequality in New York is especially large, mainly because the high end is so high. Well, if you complain about income inequality in New York, don't wish too hard for what you want, because you may get it. If one way that income inequality would come down is by the rich being less rich. The problem is if you suddenly have a slowdown in your creation of wealth and in the number of people making large amounts of wealth, who basically are people who also, to a large extent, are people who own businesses, who invest, and who employ, which is another issue. If you had a sudden collapse in the number of wealthy people, everybody else would have to pay more taxes.
Is it fair to conclude, though, that New York is potentially just not innovating enough compared to these other states?
Well, I think we're not diverse enough. I mean, I think I think we're too dependent on finance. We got the financialization of New York State's economy was another feature of the last 20-odd years. It didn't begin yesterday. I mean, this started in the stock.
Back to the 1980s, when the financial sector certainly exploded.
Right. Our industrial sector began to shrink and dry up, and our financial sector, we don't really have, outside of some pockets of Silicon Alley software development in New York City, we don't have a huge tech sector. We are not allowing ourselves to do shale gas exploration. We're discouraging a lot of other industrial activity. Well, we do have some agricultural gains, like the yogurt revolution, for instance, which in which I would note government played virtually no role. It didn't foresee it and didn't bring it about. It came about organically.
Part of the pun, I guess.
But we can't be depending on finance.
How much of this is also millionaires who are also filing out of state, who have moved out of state? And I know that's a controversial point that a lot of people like to dispute.
There's no question that millionaires move out of the state. They move out of the state all the time. The question is, what's the net change in the number of $1 million earners? The wealthiest, most successful entrepreneur upstate New York has ever produced, bar none, was Tom Golisano. He left in 2009 and said he was doing it because of our taxes.
Right.
The question is, when you lose them, are they being replaced by new, fresh entrepreneurial blood? Are new industries? Or, for instance, in the case of New York City, are they being replaced by Russian and Chinese oligarchs parking part of their fortunes in $20 million apartments? Right. Are you seeing also, and this is a question we don't know the answer to, how much of our wealth and our income millionaires and asset millionaires are moving to other states? But remember, when you're that well off, you retain a pied-à-terre, an apartment in New York City that's not your domicile,
right?
And where you don't really pay much of any taxes. I think people see the high end of the real estate market, see a lot of ostentatious wealth still around, and they assume, no problem, it's here forever. I think we need to be concerned about that. It's hard to know what these numbers say about migration, because wealthy people are still few enough in numbers so that there's not official stats to track them that clearly.
Okay, unfortunately we're going to have to leave it there. E.J. McMahon of the Empire Center, thanks very much for your time. Appreciate it.
You're welcome.